I think we're getting live. Good afternoon, everyone. Interesting week, interesting day. Again, in the options market. Good afternoon, good afternoon. Give me 1 sec. Everybody giving the link to everyone in social media platform. Good afternoon. And good afternoon to our Thursday stream. Everyone, good afternoon. Let me see if I can figure. So everyone, good afternoon. We are going to talk today about options, AMC, wealth. I'm going to try to see how we can help you and put all the pieces together. So today I want to go over call, explain why call can be dangerous. You know, calls versus puts. I've done a video like this, but we didn't go deep enough. So I want to talk about calls. Calls options, how I use call options, what are call options, and why they are dangerous when the market rebounds like today and the IV decrease, how those call options, even if the market goes up, you can even lose money or not make a lot of money using calls. So we'll talk about wealth. We'll talk about everything. I'm waiting for everybody to get situated. Good afternoon, everyone. Let me see quickly. So I'll share the screen. We'll start in about 2 minutes. And we'll be here. I don't think we'll use the full Pro Tool a lot. We're going to talk about the call options. And okay, so I'll be right back. And by the way, you can see we made $300 this morning in the room playing with the AMC. Talked about AMC on Instagram to wait a pullback. We got the first pullback, made some money, and we were done for the day. And thank God they have been dumping the stock the entire day, guys. So been playing with AMC for the first time. And just to play a little bit with small sizes, made $300 today on AMC. I want to talk about calls, everybody. Let me get everybody situated. Fred is coming. Let me see if we are finding the things. So anyway. So let me set on the app as well the fact that we are live. Hopefully everybody had an awesome day. And let's see. Forgot to tell everybody on the app that we were going to be live now. And boom, 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 boom. Wealth and options. Boom. Don't forget, guys, to download the iPhone app, everybody, so that you can get those pings, so that you know exactly when I get live, everybody. Good afternoon, everybody on YouTube. I know this is a new format. Usually we do the Tuesday 9 a.m. Tuesday 9 a.m. we do live trading, pre-market and live trades. We call the trades. This week I called the call credit spread on Netflix 585, 590 worked beautifully. It expired tomorrow. It's worthless. So people who took that trade, good job. If you are here on the YouTube feed, let me know. We are starting right now. So a couple of things that I wanted to go over, as usually, put the based on what we do and the way you have to think. The way we do things is we want extra income, everybody. That extra income, before I talk about options and the call, why call are dangerous and go deep with tips and tricks tips and tricks that I've learned over the years on calls and options and why calls are dangerous. I want you to understand again the key principles. The principles is here you have assets. So those will be stocks, real estate, a company, and those are going to provide you income here. And that income is going to be added to your job income, to your any types of income that you have in your life, your W-2 income, your K-1 income, right? And what you want, and at the end of the day, what we want is that our total income equal and is superior to our total expenses. And that's where you are really out of the rat race, everybody, okay? Which means that you need to control two things. Having more income, you know, from the stock market, from the options market. That income buys asset again. It's a circle that provides income. So income buys asset that provides even more income. And of course, you have all your expenses, and we'll talk about expenses. The holistic way that I'm looking at expenses, I've read a great book that I want to review with you guys next week. I want to share this book with you. I think it will be super helpful on the way you look at your expenses, what's enough in your life, what's in alignment with your life purpose. And this is key. So I can talk about stocks, option until we break our head. But if you don't control income, asset, liability, to have income that are going to be above your total expenses every month, to get out of the rat race, everybody, we bang ourselves against the table, because all of this is wrapped with what? Tax efficiency, right? And asset protection. So again, tax efficiency plus asset protections plus assets that provide income, this is where you are going to equal real wealth, everybody. Not the la-la land of putting everything in day trading. My aggressive day trading accounts, $10,000 account there, $28,000 account. I grow them and I take the money out to buy assets that provide income. Now, a cool way to look at your expenses for people that struggle with that. But before I do that, I want to show you again the big picture. The second big picture of everything, guys, is to think that Warren Buffett for the past 40 years have averaged 20%. And I know it's difficult because for the past few days, people are buying the GameStop and people are buying the AMC and they are making 50% return. They are making double until they come to a day like today where Robinhood closed the accounts. They don't let you trade the GameStop and the AMC, and they dump. So they did a pump, they did a dump, and they dump it on everybody. So over time, consistently, if you make 20% net every year and you start with a Roth IRA of $5,500 and you add to the $5,500 on your Roth IRA, I think now is $6,000 contribution, and you compound that for 20 years to 20 at 20%, you have $1.4 million. And you don't need to take a lot of risk to do that. So again, what I'm saying is you take the day trading to buy the assets in your retirement account that compound tax-free and tax-deferred. That's how you make a lot of money, everybody, over time. I think we finally got Fred. Let me see. Monsieur Fred is being late. He's on French time, so let me put him in, and he's in. So this is really the premises. Everything that we do, we want you guys to fight for 7%. You know, that's the 7-20 rule. 7% to beat the rate of inflation, and 20%, right, to equal or match Warren Buffett, everybody, okay? And that's really what we strive for, everyone. Now, one way to help you guys also is with the way you look at expenses. So the way you look at expenses that I am super pumped to share with you on the book that I was reading is that you have to look at your expenses as a way of trading your time for life energy. Like my wife goes every day, she goes in a car, she goes to work, it takes her 30 minutes, and she works 7 hours, she gets back in the car, she comes back, she trades time for money, which is life energy, because the only thing that we know for sure in life is that time goes down. We all have the same average in life, which is about 78 years. So like I'm 49 years old right now, and we have 78 years on average to live in this planet, which means that I have about 29 summers left. So 29 summers left, and I'm pretty much out of here, okay? So could be more, could be less, but that's the key. The key is our time. So when we do spend money, which is as equally as important as making money, guys, you got to think about your expense. Is what you spent in line with your dreams and in line with your lifetime purpose? Is it enough? What enough is enough? 3 pence or 10 pences? What's enough? 1 iPhone or 10 iPhone? So this is very interesting to me. I'll go deep with the book that I read here for you guys next week, on how to align those expenses with your value, your life purpose, your dreams. I think it'll be very powerful, because for a long time in my own life, guys, I was a day trader. I work in prop firm. I work in hedge funds. I spent a lot of money. I was making a lot of money, but I was spending a lot of money. So I had to relearn, to reprogram myself, to really think about money differently, in terms of life experiences, in terms of what's the end goal. Like I love to travel. So each time we spend money towards traveling, we are very foodie, going into a restaurant and having a good dinner with our family, provide a nice experience, memories, and it's part of the expenses that I put a plus on. Now, if I go buy 3 iPhone, I couldn't care less. It's a negative expense. If I go, let's say, I don't know, food, it's a neutral expenses. We have to eat. So a lot of the stuff are going to be interesting, and a lot of the stuff have been improved a lot here in my net worth as well. When you track not only with your accountant, but you obsess daily like a flower that you take care of by using the Mint tracking. So I use Mint, and for the past 2 years that I have used Mint, I've almost, with last year, last year I quadrupled my day trading account, not once, but twice. Once I took a $10,000 account to $42,000 account. Again, you can go back on YouTube, watch the video, or the SPY, in COVID, February 19, I took $28,000 that I brought to $121,000. So what I do when I achieve those results, everybody, and you'll see that when I do the intensive mastery bootcamp, February 8, which by the way, it's in 10 days, you'll see that I use those profits in day trading here, the $28,000 account that we took last year to $121,000 that was streamed on YouTube from February 19 on. You can see there's about 6-7 videos about that. I take the money to buy assets that provides income, and that income is aligned with my lifetime purposes. It helps pay for vacation. It helps pay for restaurants. So when you have dividend income, when you have cover call income, when you have naked put income, right? Those income provide income to buy more assets that provide more income, or they pay for your life experiences that are aligned together. Another thing too is when I took this $32,000 account last year, starting with a $10,000 account, trading SPY and the options, and sharing some of the option strategies I'm going to share with you on sharing call explain. I'm going to go deep on calls and why I think calls are super dangerous, everybody. I want you to understand that those principles are only real if you reinvest this money back into assets that provides income. So the same account here, you can see last year, right, in November, as I just showed you on the previous slide, made a net liquidation value of 42, made $32,000 from a $10,000 account. Well, I don't know about you, but this was twice that I quadrupled the accounts. But each time, instead of gambling back the entire money like someone who goes in the Vegas, makes $10,000 and puts back everything in the slot machine until they lost it. I know enough that if I take a $10,000 account to 42 or a 21,000 to 128,000, to 121, I am mature enough after 27 years of trading to take the money to send it to my long-term investing with asset protection, tax efficiency, to reinvest in my long-term investing stocks that provides dividends, tax efficiency, and asset protections. And that's how you are going to be wealthy. Do not put everything back into day trading, guys. It just doesn't work. It never works, right? Because 90% of the day trader over a long period of time lose money. So you need to understand what the others are doing. This is why here I manage this $1 million account plus for our family, and the bulk of it, almost $1 million, is long-term investing, everybody, okay? So I want to go over calls explained, so I'm going to go back to full screen, and we are going to do that as promised. I told Zafar that I will give him the cut. So what time is it? It is 4:24, guys. I'll write it down there. And today we are going to talk more deeply on the first day stream session on calls explained. So I'll go deep into calls, 3 key parameters to master calls in options calls, but you got to be very careful. Calls can be very dangerous. And so I will explain why I prefer puts, why calls overnights are dangerous if you do not close them as a debit spread with a short call, a long call and a short call. So let's go deep. Let's go now. Calls explained. So at a very basic level, let's start quickly and we'll go deeper and deeper, more advanced. What is a call? Okay, a call is an option, but not an obligation. So let's go to the option chain directly. Don't need to make semantics here. So we go from these AMC trades we've done this morning to the SPY. So if I look at the SPY, okay, what is a call options? So let's look here, okay? If I look at options that expires, let's say tomorrow, okay? And I look here where the market closed at about 377. So here it is. Let me show you. A call is an option, but not an obligation to buy the stock at a certain price. So let's say you look at your support and resistance, and you say to yourself, okay, 382 is resistance, and 375 is support, right? So you do that. And you have the choice here. So you go at the 375, you look at the 375 strike, and it's 406. So right now, look at this. We are at 377. You are 2 points in the money, which means that 2 points out of this call options is real money, real value, and 2 points or 2.06 is a combination of implied volatility and time value, okay? Time decay in the options. And I'll go and explain that. It's very important that you understand. But again, at a very basic level, a call is an option, but not an obligation to buy the stock at 375. And for that, you pay $4.06. So look here. Instead of buying the shares for $377, one share of the SPY, right? You can buy one contract, right? And by the way, that would be 100 shares here because 100 shares is 100 contract, So 100 shares at 377, right, is $37,770, okay, in cash requirements. Here, I can buy one contract of the SPY for $4.06, which is times 100 is $400, okay? So $406, everybody. I control 100 shares of SPY. So it's not completely like this because usually the way you control those shares and the relationship between the call and the stocks control is into something called the delta. So look at the percentage. I have a 64 delta, which means that my correlationship from my option move to my stock move is 64%. If you wanted a higher correlation, you go deeper in the money, deeper in the money. See here it's 75%. You are deeper in the money. But here at 375, you are in the money call options with a 64% correlation from the stock to the option. Each time SPY goes up a point, right? SPY goes up a point, you make 64% of that. You make 64 cents. Okay? So at a very basic level, right? Options and call options are a way to leverage your way in stocks that you are not able to afford. Because if I was able to afford the stocks, I would go all day long buying the 100 shares of SPY. But most people want the leverage of getting the call options. Now, at a very basic level, that's the idea. A call is a contract that gives you the options, not the obligation, to buy a stock at the strike price, which is in this case 375 in my example. Now, let's go deeper with options so that you understand options. And this will help you mastering all kinds of options, by the way. So I put a quick spreadsheet here, and let's go. So let's look at a $1 call on all those examples. And here it is. So first premise is what? We're buying a $1 call, and the $1 call is broken into three components. Every options have three components: real value, time decay, implied volatility. Now, if you don't know what implied volatility is, it's the fear factor. When people are fearful, implied volatility is up and it pumps the premium. When people are complacent and there's no fear in the market, IV is down. There's no fear, okay, in the market. So let's take an options on a call here, and let's assume scenario one here. So scenario one here, market goes down, 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 down to support, and you're like, you know what? This is a great time to buy a call because we reach a support. But the problem is, as the market was going down, what happened? The fear went up and up and up and up. The IVs are jacked. The implied volatility is pumped. And you need to be careful, because when the fear factor is pumped, that means the premiums are pumped. So the IV is up, the premiums are pumped, the fear is up. So the call premiums are pumped. And they are artificially pumped. So in my example here, you pay only 20 cents of real value out of the $1 options, 50 cents of time decay, and 30 cents of fear. Now you buy this on Monday. Okay, let's say you buy this option on Monday. Now look what happened on Friday if it's a weekly option. And this is where you are going to see that calls are a terrible investment alone, especially short duration call overnight. Now it's Friday, so I bought this thing on Monday for $1. What happened on Monday? Let's say the market stays the same. It doesn't move up, it doesn't move down. I'm still at 20 cents here. What happened to the time decay by Friday? All options goes to 0 by expiration. This is 0. The fear factor, was at the max. By Friday, the market starts coming back a little bit, and this 30 cents dropped to 10 cents. Now look what happened. You had a $1 asset here, and now that $1 asset is 30 cents. Is that a good deal? Is that a good deal, everybody? Not really. That's a terrible deal. And this is, in your mind, you have an asset that you bought for $1, but this is where you realize that options are not assets. They are decaying, dangerous instruments that you need to master. And so out of the three components of an options on short duration options from Monday to Friday, 2 out of the 3 components went against me. IV went back down because the stock went back up from support. Time decay goes to 0. It's a fact by expiration. And now the real value might have gone up, But the real value in a call needs to go up enough to fight against the time value at zero and the implied volatility going back down from a market rebounding. This is why I am not a big fan of buying calls at support. They are extremely dangerous, everybody. All professionals know that. This is why a trick that you can do, if you have a support and you have a resistance, and I told you now we're entering a little bit more in depth into calls explained, call options explained, and this is ninja techniques here that I hope you understand and will help you. But the way I look at it is cross, retest. My stock went down, and I'm at support. If I am at support on my charts, I'm going to buy the calls. But if it starts rebounding and fly during the day and finishes the day, this is the close of the day here, I'm going to make sure that I'm going to sell the resistance of the day trading zones, full pro tool or retail tools here. I'm going to sell the call here. So I'm going to reduce my call expense, and I'm going to be prepared for the fact that my IV is going to go down, my time decay is going to go down, and I need enough real value to go up to offset those 2 out of 3 components against me. And the way to do that is you sell a call above. And now you close it, you reduce the cost of your call, and you open a debit spread, a call debit spread, maybe 70 delta, to reduce the cost of your call. Remember, calls are dangerous. 2 out of the 3 components go against you when the stock rebound, and people are looking at themselves and say, why am I not making money on my calls? Especially if they are out of the money calls versus deep in the money. Now, before we wrap that up, and I hope this is very helpful because a lot of people always ask me why I'm not a big fan of calls. I just explained it. Again, I am more of a fan of open a deep in the money, 70 delta call debit spread. So I buy the call, let it go up, then sell the call, reduce the cost basis of my entry on my call, and reduce my risk because the IV and the time decay in the call will go against me unless you have a lot of duration and the calls are deep in the money over 70 delta. Now, let's compare that with puts because a lot of the Forex account, the $42,000 account that I took on YouTube, to the $10,000 that I took on YouTube to $42,000, everybody, I did it, everyone, with puts, mainly with puts. I'm really good at using the SPY puts or the tech puts because I will explain why I have the velocity of the entire option components going in my favor. So, calls explained versus the put right now. Now, let's take the example. Market tank. So market is at the top. And at the top, I'm buying a put. Let's say I buy a 385 put. Yeah? And with low IV, because we are at resistance. So I'm buying the put, low IV, at resistance. That's what you want, right? You don't want to buy puts when stuff are already down a lot. So you're doing that. Now the market goes down. What happened to my IV? Fear is going up or is going down? Now look what happened. The fear in the market is going up. So that pushes my premium of my puts up. Real value of the option goes up and the time value goes down. But look what I have now. 2 out of the 3 components in the puts are in my favor. When I buy calls, 2 components of the key components, real value, implied volatility, and time decay is against you. 2 out of the 3 against you on the calls. On the put, 2 out of 3 are in your favor. Because in this example, everything goes up. I bought it at a buck, the real value goes up, the implied volatility goes up, and the time value goes down. But the velocity at which the real value and the implied volatility goes up is big enough for me to make money in the put side. So this is very important. This is why calls alone, guys, are not the best investment. They are dangerous. They are for suckers, as a matter of fact. So I'm trying to help you compared to all the videos you'll get on YouTube about calls I explain. They'll tell you this and that about calls. I'm telling you, after 27 years of doing calls, former prop firm trader, former hedge fund trader, 4x in my accounts, not only once, but twice, stream on YouTube last year. I'm telling you, calls are for suckers, and be very careful, because calls, especially if they don't have a lot of duration, like I have nothing wrong if you are deep in the money, and a lot of duration. Let me show you in the screen, and then we'll wrap the conversation. If I really wanted to buy a stock, let's say Palantir. Everybody knows that I like Palantir, and I gave the buy signal on Palantir around 22, 24. Now, if I really like Palantir, I would go maybe 2023, and I would go as deep as I can in the money, where I know that the correlation is at least 70%. That means that I would buy somewhere a call that is around the 20 to the 15 call. I want it as deep as possible. And this would be probably the only call I would buy on Palantir. So instead of buying Palantir at 36, I would buy the call at 23, and I own it for the next 2 years. But again, my preference, especially in this example, I prefer to own the asset. I prefer to buy the stocks, because with the stocks, I can use the trifecta of income. I can sell cover calls for income or sell puts and get dividends. But this particular one doesn't get dividends. But if it was a dividend stocks, I get dividends, cover call, naked put income. So I have a trifecta effect of doing income. So I hope these discussions about call explain from very basic. Call is an option, not an obligation to buy a stock at a certain price, and a leverage mechanism to get into a stock that you like that keeps on going up. I hope this is helpful. Try to avoid to go with a lot of calls intranight with short duration, with no naked calls on the top to protect you. Always use a long and a short. That's what we do with our full pro tools, with our retail tools. You know, we use charts like this, and we are looking at the buy zone, caution zone, and that's how we do. Like this today, I was playing with this AMC that everybody was playing. I bought some stocks around the 7 and the 9. You know, I told the guys this morning on Instagram, be very, very careful chasing. Look, to the tick, they had the tail going right there at the support of the cloud. You need tools to help you navigate the markets so that you have support, resistance, and trend to help you put your long call, your short calls. So for instance, me, in this example here, for the past few days, what do? It's the opposite. I do the puts here at the top of the buy zone on the day trading zones. Let it go down, let it go down. Now I open the short put, right? Same, you know. Now, Sam, if it was a call strategy, I would open the call long call here, but I explained because of the IV rebound, I would make sure I short the call here. So it's all about trade location, support, resistance, trend, support, resistance, trend. So I hope now, finally, everybody, the myth of everything that I've said for weeks, if you are into our private group, if you are into the YouTube channel, that calls are only good if you are deep in the money, long duration, and you close them with a short call. So I hope this explanation on call explained for beginner and advanced people was helpful to you. Take care, everybody. Don't forget, below this video, you have 14 days, 14 videos that show you how I took an SPY account and tech accounts options that I took from $28,000 to $21,000 last year. Take care, everybody. Stay safe. Okay, so hopefully that was helpful, guys, on the feed. I try to always help you guys with the stuff. If you guys have any questions on the YouTube feed, I know this is a new YouTube format that we do now on Thursday, 4 p.m. It's going to be Thursday, Options Thursday or Wealth Thursday, and Tuesday will be like, we'll continue doing what we do at 9 a.m., pre-market analysis, day trading live, you know, real account. I am up 20% so far for the year. I was showing the guys, let me show you if I can find the slide. Last night we had a private VIP event, and I was showing the guys that after the quadruples from last year, I'm starting the year at Warren Buffett level. So this was the quadruple level, guys, right there, the 28,000 to 121. Then in November, I'll show you the little one, the $10,000 that I brought to 33, and then $42,000 for the year. You know, that was a quadruple. And now for the year, let me show you, I showed the guys last year, that was on all my accounts included was about $2,000 last year. So I took again, I'm doing it again, right? And where is it? Here. And I'm doing it again, taking, no, this is not the slide, I'm trying, and taking a $10,000 account, and I'm going to grow it up again, you know, as high as I can. Of course, I have different accounts. I have two $10,000 accounts and one that is 25, no, sorry, 40, close to $45,000 account at TD Ameritrade. So guys, doing this, the motion of the ocean, you know, it has been started, actually we started the year super strong. I'm trying to get this stuff for you guys, if I can find it right there. Not the trades from last year, but the trades from this year. Here we go. So far, again, if you look at the account, and I will stay accountable to everybody in the room, $2,000 for the month. The month is not done. Actually, it doesn't even count today. Made some money on AMC. $12,000 net liquidation. You take the commissions, and roughly this is close to 18-20% return on my money in 1 month. So again, what I'm going to do is, a lot of people talk about growing small accounts, but very few people do. This is what I do. This is what I'm known for. Take small accounts, bring them up, because I want to be able to take that money and put them in long-term investing, as I showed you, to buy assets that produce income, because I do not day trade with more than 5 to 10% of all my stock market cash assets. So I take small amounts, risky amounts, aggressive amounts to have aggressive rate of returns, 20%, 400% like last year. Take the money, reinvested them in accounts that provide assets, that provide income, and turn the wheel again and again and again. So hopefully, everybody, that was helpful. I love you all, everybody. If you liked what we did today, your likes, comments are appreciated. The feed is very quiet today. If it keeps on being quiet, then we'll do it once a month. Give love, you know, likes, comments. If this was helpful, I share stuff that nobody shares with you. Everybody will tell you calls are the bomb, calls are not the bomb. And now you know why calls alone, especially if you bring them intranight, are not the bomb. I have no problem doing some calls sometimes on SPY for a short, quick trade, buy them at 50 cents, 60 cents, sell them at $1. But this is not as good as puts, everybody. So calls versus puts, calls explain. Go back to the recording. I hope it was helpful. Love you all, everybody. Take care, and I'll see you next week. I will try at one point to do that book review. I really want to do it because it keeps me accountable to you guys to read my one book a week, everybody. Take care, everybody. Love you all.